Hello, my lovely people. It's Sunday. It's Q&A time. This is going to be a bit of a divergent one, but it also has some very key lessons for investors, as well as some tricky questions. One super interesting one is CIA behind Bitcoin? Number two, what's better, being a full-time investor or do a side hustle and keep your main job? And so much more. So thank you all for coming. Shout out to Sean Donnelly and TNT Tesla and KH for being here in the chat. Let's jump in. So I hope my voice holds. I was waiting for the video to pop live on YouTube. It hasn't done that yet. There it is. Yeah, let's hope we're good to go. And where's my little magic key? Here it is. Okay. We are ready. I had some slight technical glitches this morning. And none of this is financial advice. All the questions come from Patreon. Shout out to everybody there. And let's start at the very beginning. This is from Large Marge. If the CIA is the creator of Bitcoin, as it has been suggested many times, then doesn't it mean that the US government ultimately controls the Satoshi Wallet and reportedly 1 million Bitcoin that it holds? 1.04 million Bitcoin to be precise. If that is correct, then the US government already holds a Bitcoin strategic reserve. If this is the case, and then perhaps the US government is blindsiding the whole world by secretly stacking Bitcoin so that other nation states cannot copy them before it's too late for them. Super interesting question, Marge. And I know a lot of stuff floats around, but let me tell you my point of view. First of all, sad to say, the US government does not think ahead. Right now, we've got 2 people trapped up in space. They were supposed to be up there for a week or 2, and no less than a week, in fact. Now it looks like Boeing and the money that NASA have spent with Boeing, all your tax dollars, their ship doesn't work. Now, if they would swallow their pride and knock on Elon's door, hey, SpaceX, can you help our 2 souls here lost in space, literally? Yes, we can do that. But no, they won't. Same thing why they won't give internet to rural America or grift private charging development to other companies that simply can't pull it off. The US government does not make smart decisions. It is not a good allocator of capital. And in fact, for every $4 they spend, they generate $1 in GDP. We'll talk more about that later too. So let's see the reasons I have against the US government creating Bitcoin. First of all, there's a lot of ideological misalignment, especially going back 15 years. Bitcoin was created to provide a decentralized form of currency that operates outside the control of any authority, including governments. Therefore, it doesn't fit. The US government relies on centralized financial systems and regulatory oversight and would have little incentive to create a system that undermines its own control over the money printer. Second, lack of evidence. While there is no concrete evidence to support the claim that the CIA or any other US government created Bitcoin, some conspiracy theories suggest its possibility, but these remain speculative and unsubstantiated. Also, we'll dig into some of the key players in a minute, but the true identity of Bitcoin's creator, Satoshi Nakamoto, remains unknown, and there is no verifiable link to any government agency. Also, technical and community origins. Bitcoin's development is rooted in the cypherpunk movement, which advocates for privacy and cryptography to achieve social and political change. The government would not want to do that. They like control, operational transparency. The US government, if they had created it, they would likely have much more control over it, its development and direction, and they do not in any way, shape, or form. And regarding the Bitcoin holdings, yes, they do have some, but they are from seizures of criminal activities, not purchases or mining operations. But let's look a little bit into the roots first. I think all the answer is really clearly here. Despite Satoshi Nakamoto, there are 3 key players that are well known. First of all, we got a little white spot on my shirt. I do. Beyond Satoshi, who is anonymous. Left, right, we have Hal Finney, may he rest in peace. Adam Back in the middle, legend. He created the core piece of technology that made Bitcoin happen. I think it's called Hashcash, which is a proof-of-work system that was initially created to combat email spam and denial of service attacks. And I think that was built in originally in 1997 and formally described in a paper in 2002. And then Nick Szabo on the right. And there's many, many others as well. But None of these have any ties to any government. And it's all proven that they were instrumental in getting Bitcoin off the ground, apart from just Satoshi as well. So from that perspective, large march, no, government is not involved. Government cannot make clever decisions, cannot allocate capital, would not like things like Bitcoin because it undermines, technically, many governments and their ruthless control, especially over things like the money printer, to infinitely create dollars. So let's jump on to the next question. And I hope that didn't disappoint people that the CIA is not behind Bitcoin. Evergreen Gal, never put all your eggs in one basket is a common teaching of the IA community. How do we know when we have achieved a reasonably diversified portfolio? And is there a minimum number of baskets needed? Could just 3 baskets be diversified enough? So this is a super interesting question, and I'll break it down real simply. First of all, it's very, very important to understand where the puck is going to be. What are the big narratives? So since 2021, 2022, it's very clear 2 things will be big, especially in 2023. We had that, late 2022, when ChatGPT launched. Can you imagine? It's November 2022, a long time ago already. But be on top. My focus is always extreme focus in very few assets, and also no more than 2 narratives. And the 2 winning narratives right now on the planet are crypto and AI. That's it. The rest is all noise. What will the future narratives be? There'll probably be things like, space, bots, things like that, but we're not quite there yet. We're getting there real fast. And AI bleeds into bots, by the way. So that's the first step of diversification. Understand ahead of time where the future is going, where the money will be allocated, where the money will be made, where the disruption is going to happen. Those 2 things. Second, this is kind of key, is the diversification across the top narratives. I focus on doing a huge amount of upfront work on identifying the winners. And by the way, I forgot to add to this chart. I'll zoom out for this. Every single one of these, with maybe the exception, Bitcoin in the early years was fudded to death by everybody. I mean, if you're in Bitcoin 2015, 2016, 2017, people mocked you and ridiculed you. MicroStrategy, mocked and ridiculed for years. Me, since August, September 2020. Solana, mocked, ridiculed for years since 2021, March 2021. Tesla, still mocked and ridiculed. Okay, NVIDIA, mocked, ridiculed, it's overvalued, etc. Again, ignore the numpties that are out there because they don't know. I do extreme amount of upfront work to get in early, get in hard. That is the secret of doing well. And when it comes to allocations as well, one other point that's important to note, sometimes allocations can completely spiral out of control, especially when an asset does incredibly well. That's the case of things like Solana and MicroStrategy. You could argue it's irresponsibly long, some of these assets, but that's what happened because they blew up so much. And that's just the case. Some have yet to blow up. Tesla has not, but we've had great buying opportunities, but it will blow up in the future. The question is when. Again, I've never been more certain of any other asset than that right now. Even more so than Bitcoin, believe it or not. So that's the story, and that's how I diversify. Number 1, pick 2 winning narratives. Be in before anybody else is even talking about them. When you find the narratives, excise the winners, get in early, get in hard. It's that simple. Thank you for your question. Next one is from Aureus. Hi, James. Your background in Forex, what opportunities do you see to trade between USD and stables and yen, like GYEN and JPYC, especially after the Bank of Japan rate hikes and impending Fed rate cuts? This is such an interesting question, and it's brilliant. Let me tell you about my journey, first of all. What I started trading in first was Forex, then commodities, then stocks, then tech stocks, then crypto. as you go down this path, I create a little chart to explain. The more you go from Forex to commodities to stocks to tech stocks to crypto, the easier it is to trade. When you trade Forex, your future is determined, again, by governments who don't know what they are doing. Japan said they would jack rates. Markets crash from 25 basis points. And then they say, okay, we're not going to do that again. Sorry, guys. We screwed up. Who can predict what these numpties will do in governments? You can't. They're idiotic. It's too risky. Commodities, they are determined by things like OPEC and weather and all sorts of crazy stuff, which is also impossible to predict. Stocks, many of them heavily manipulated. Tech stocks. Tech stocks you can play because if you understand the narratives, you can play where things are going to go and find the winners. So in the 90s, I discovered NASDAQ tech stocks. I haven't left since, okay? And then crypto came along. And when you do things like perp trading, it's stealing money from a baby. It's that simple. So that's my journey. Forex is putting your destiny in the hands of a moron. Don't ever do that. Play crypto, play tech stocks, understand the narratives, excise the winners. And that's it. It's easy. Don't try and predict kind of what's going to happen with weather and stuff like that. So that's my take on Forex. Now, if something extreme does happen, I'll give you an example of where I do play. If you see the price of oil going to zero, like we did during COVIDians, you play that. If you see the price of coffee beans or cocoa beans explode to extraordinary heights, you short. So things like that I do still dabble in, but I have to have literally 3 standard deviations away from the mean before I play in that. You know, copper right now is probably becoming very oversold, and that might be worth a dabble in the very near future. So not closing my eye to commodities or some stocks, but I play in the little easy categories because it's all about winning. Anyway, next question. From Cryptocephalon. James, you discussed the recession and its timing. Do they always occur mid-bull run? Will you be exiting any of your positions because of the recession, or do you think the drawdown will be small due to the coming rate cuts? This is a super important question, and it's very, very important. We stress it a lot, so thank you so much for asking it. And by the way, everybody's rattled. Everybody's always rattled by recessions. It's like time to move to cash or whatever. Let me show you how things work in reality. First of all, it's always bad to paint with a broad brush. So first, these are the facts that I've seen in my life, looking at markets basically since 1990. And here you can see us 35 years, by the way. There is always a recession happening. Always. And by the time the government announces a recession, it's already ending. And at the time, markets have already rebounded or started to rebound. And the government data is unreliable. We're talking a lot about government today. I'm sorry about that. But I have to answer the questions. And the avoidance of recession is due to extreme government spending. Let me break down a couple of those points and explain exactly what I mean by this. First of all, some facts. And this is just 2 examples of huge sectors that are in recession right now. First of all, manufacturing. US manufacturing sector is in a significant decline, with activity dropping for record numbers of months in a row. That has never happened in the history of the world as of the data I just saw in July. And the downturn is largely attributed to a slump in new orders, reflecting economic uncertainties and zero demand and inflation, etc. Recession in manufacturing in the United States. Look at Germany. It's even worse. Commercial real estate. Commercial real estate is not in a recession. It's way beyond a recession. It's in a massive death spiral. And it has been for many years now, ever since COVIDians again. More than $1 trillion of commercial real estate loans are due over the next couple of months, posing a huge exposure to banks that will need to be bailed out, or the banks will just all consolidate together. And that's just 2 examples. But there's more. Let's talk about the situation we are in right now. And this goes back to another point we mentioned earlier. Government spending is out of control, but it's what's preventing a recession. So if you break down the numbers here, government spending has played a huge role in maintaining a positive GDP growth. In the first quarter of 2024, real GDP increased at 1.4%. But government spending in 2024 is estimated to be 23.9% of GDP. Okay? You take out government spending. That's basically juicing the economy. We are in a deep, deep, deep recession. The Inflation Reduction Act, classic case in point. Spending money, over $35 trillion in debt, to keep the GDP positive. So it looks like the government's doing a good job. The truth is, they're not. Sorry about the harsh truth here. I hope I don't get disqualified from YouTube for sharing truth. Anyway, let's look at another example. This is a chart. And again, you mentioned mid-bull run. I don't think we can do that. This is a chart of recessions and election cycles going back to 1950. And the black line is the S&P 500 index. It's showing it just goes up over time. Of course, there are some blips. The index always trends upwards because money is printed, which floats all boats. Recession indicators are the areas shaded with the kind of gray line. And then you have the presidential governments. They're divided into sections based on presidential terms, with blue and red backgrounds representing different administrations, which I will not talk about because we are not political here. Now, one of the big things that you see from this is the recession frequency. They're occurring less frequently and in recent decades compared to the mid-20th century. And the gaps between the shaded areas have also grown wider. So the governments are getting better at juicing the system, like government spending, like cutting rates, like increasing money printing, which all take us out of a recession faster or prevent a recession from happening in the first place. Again, if there was no government spending and if there was no government money printing, we'd probably be in a permanent recession since 2020. And that's just a fact of life, okay? But there's one last thing. The only thing you need to focus on is this. It's not hard, and everybody will say this. This is not a secret per se. Watch the global liquidity. Again, the governments juice the markets to prevent these gray bars from happening. Okay? They cut interest rates and they increase money printing. Global money printing, global liquidity had just hit an all-time high. The black line here is Bitcoin price. And the golden line is global liquidity. I like the way they use gold for the color, by the way. Shout out to Cross-Border Capital for good color choices for somebody who is colorblind. Thank you very much. So can you spot the trend here since 2014? Global liquidity goes up. Bitcoin prices go up. We are going up. Don't be afraid of a recession. Remember, scared money don't make money. Write that down. Very important. Next question is from Bronx Crypto. Loving all the IA does to help people. Budding covered call addict here. Nice work. For a stock you want to sell, e.g. 20% of Tesla bag when it hits $2,000 a share, would it make sense to sell a covered call on that portion and select a strike price that would likely get hit? Seems you can goose returns this way. And if so, what are you looking to in terms of strike price and expiration? So first of all, you know my covered call strategy. You sell 45 to 60 days out, like clockwork, but you sell on volatile spikes and deviations from the mean. Mean reversion model is extremely helpful when it comes to identifying when to sell. But let me take you back to your question because I want to set the stage here and not have unrealistic expectations. First of all, Tesla will never hit $2,000 a share because they always split between $600 and $800. So imagine if we go to, say, $650 a share, that means they'll probably split 3 for 1. So we'll never get to 2,000. I hope that makes sense. Secondly, you can't look so far out into the future. It all depends on the volatility. All depends on the valuation. I only sell Tesla calls on gamma squeezes when I know it's going to mean revert. And also, for me, at least from my perspective, Tesla is a kind of a keeper bag. As long as Elon is there, it's a keeper bag for me because he is the number one capital allocator on Earth. And I know the Elon haters hate to hear that, but it's just a mathematical fact. And that's all we talk about here. This is not about who you like or who you do not like. This is about prosperity and winning. That's what I care about. That was for the Elon haters out there. Let's jump ahead. And trust me, Bronx, crypto, the minute I call Tesla, you will know about it. The minute I do. Next, from Renaissance Gamer. 2 times when markets were imploding, centralized exchanges like Schwab and Fidelity went under, which means they stopped working. Microsoft programs and CrowdStrike have crippled the world a few days ago as well. I believe Coinbase's days are numbered before they falter, with them monopolizing digital assets for TradFi firms. How long before these problems are exacerbated and investors can move to decentralized finance? And thank you for the hard work you do, James and I team. You're all minting retirees like JP does the dollar. I love it. Thank you so much for the kind words. So I've always said one of the reasons I'm in crypto is because I'm a TradFi guy and I know it's ripe for disruption. Therefore, I was looking for a chain that would disrupt traditional centralized exchanges. And we know what that chain is. That was always the plan. That's what I was looking for. Because for the following reasons, I think, and by the way, I was all sorts of very, very bloody upset when Fidelity and Schwab were down. That outage cost me at least 6 digits. Okay, because I could not buy at the levels I wanted to buy. As if we have some disruption here in the markets. We're going to shut down these centralized exchanges. We're going to have our market makers place some nice trades so they can fill their bags. And then we'll jack up the prices. And then we'll dump on retail. I'm almost certain that's probably what happened behind the scenes. Because they were all down. Fidelity, Schwab, Vanguard, etc. By the way, I used the thing called TD Ameritrade for over a quarter of a century. Never once had an outage. And believe me, there were chronic, catastrophic times where I needed to trade. That TD Ameritrade platform never let me down. Within a month of moving to Schwab, I get hosed. It's a piece of shit, and I hope they fix it because it's not acceptable. Same with Coinbase, etc. So sorry for saying the poop word. That just slipped out with emotions. But and we're not emotional here at all. Let's talk about why decentralized blockchains will take over. And the case in point is, holy crap, I wish I didn't have to use Schwab or Fidelity or any of this garbage. It's so much nicer and safer out there in DeFi. But the beauty of DeFi and why the world will move to blockchain is centralized systems are prone to single points of failure, like you mentioned with Microsoft and CrowdStrike, as evidenced by all the recent outages. And DeFi platforms are built on blockchain technology, which are inherently decentralized, reducing the risk of such failures. Yes, blockchain can go down, but remember, these things are in beta. It's very, very early days. Very early days. Second, trust and transparency. So important. Honesty, trust, and transparency. They are the pillars of this channel. DeFi platforms operate on public blockchains where all transactions are transparent and immutable. The transparency builds greater trust among users, etc. And this will help us deal with the shady, opaque games and practices by market makers, which probably happened last week. Also, lower costs and greater efficiency. The traditional systems involve multiple intermediaries, each adding their own fees and spreads and delays in transactions. DeFi is not that way at all. And you can do all sorts of crazy things that you cannot do in the traditional markets. Also, you get broader access to financial inclusion, which is cool. People from all over the world can use it without permission, which helps get people that may come from an unprivileged background, help them get ahead, which I'm very supportive of. And finally, innovation and new financial products. Again, my dream one day is to have one platform where you can do everything. You can exchange assets across multiple currencies and crypto all together. So for example, you could be trading Bitcoin in whatever swap it into a stock 24/7, and then swap that into another crypto or into a stable coin in any currency at any time. We're almost there. We're getting there. We'll be there within 2 or 3 years. And then we'll be able to do everything. We'll have limit orders, we'll have perpetuals and options and futures. We'll be able to manage risk very carefully. That will be a dream. And then TradFi will be toast. BlackRock already sees this. That's why they're building a new exchange in Texas, away from New York regulation, so they can be innovative again. I know people say, oh, it's BlackRock, I can't trust them. Well, you certainly can't trust Schwab of the world. Anyway, moving on. Next question. From Shanzi. Hi, James. Have you revisited Palantir recently? I've been adding to my Tesla bag, but wondering with Palantir having a lower market cap of 57 billion, if this stock could run faster in the near future, and then layering out of Palantir into Tesla with profits. That's always possible. I did say last time I had a question on Palantir, I remember it distinctly. I said it is a beautiful range rider. You buy it like, I don't know, it was $9 or $15 and you sell it $20, $25. I can't remember the exact numbers, but let's check out what Palantir has done because it has broken out. So well done to the Palantir holders. This is on ATR. It is up. It broke through layer 4, heading towards maybe layer 5. But there are things that always kept me out of Palantir. And I look at financials and I look at growth prospects and some good news. But let's look at this. First of all, this is the good news. The revenue in blue here is growing and they're becoming profitable at last, which is good. But the cash is also growing as well. And they have debt, which is very constant. So the debt is low. All this stuff I like. Okay, but there are some warning signs with their financials. Their revenue per share has been in decline over the last 3 years. That's not good. And the quality of earnings is also very low per the Sloan ratio, which is typically made up of accruals. People aren't paying their bills. Not good. Now remember as well, Palantir, their biggest customer is probably the US government or other governments. So it's very unclear as to what these deals are, how big they are, how profitable they are, because the other thing that keeps me away is I don't like what I can't see and understand. That opacity I do not like. And also, this is something I hate. Always hated. The pink is what I call pocket lining stock-based compensation. Compare that to the green, which is net income. Every single year, they pay themselves billions in stock. Okay? This screws the shareholder. I don't like this. Now, I realize you have to pay stock-based compensation to attract talent, but there's no other company as egregious as this. None. Literally billions every year, which hurts the retail investor. That's why I don't touch. And final reason, it is significantly overvalued. The Guru Focus fair value is about $17 right now, and it's trading, I think, 25 or $30 if I'm not mistaken. So I don't know. You know, every asset can do very well. This is just one that has things that keep me away from it. Again, when I analyze something, I need to be able to see everything. When I can't, I don't like it. And when I see things I don't like stock-based compensation, extreme, excessive pocket lining, I hate that in a big way. Hope that helps. Next question is super interesting. This one is from Licorice Salad. I'm in my late 30s and I've been a professional for 20 years, including 5 years of study. To increase my income over the last years, I've explored various side gigs and dedicated some of my limited free time to developing separate income stream. Recently, I've significantly outperformed my side gig income through investing and investments. So, what should we do next? This is the $1 million question, which had me think about it. It's like, so given the incredible market performance of my bags, etc., what should I do? Focus more on side hustles or on investing? So let me, I put together a little table for you, which I think will be helpful for everybody. And this is kind of the pro and cons, or kind of the advantages of each area. You can know which way I'm probably going to go. But anyway, let's talk about side hustles and for income potential, side hustles. They do offer immediate but limited income. You're not going to get rich off a side hustle unless you're doing something very special, very, very special. Also, time commitment. Remember, if you've got a full day job and you're doing a side hustle as well, it eats your leisure time and it can lead to burnout. It means you're going to be crap at your day job or crap at your side hustle, which isn't good. Risk, generally low financial risk to do a side hustle, but high time investment. Time is money. The good thing is, though, skill development. If you do a side hustle, you might stumble into a new career opportunity. And this is the really important thing here. And I will stress this. The world is changing very fast with AI. If you have a side hustle that's AI-based, embrace it hard, because that could be your next ticket away from your day job into a new job. So do not fade that opportunity, point number 4. And also flexibility. It does offer more control over time and can be adjusted based on personal schedule. So that is side hustles. Now, investing. This is going to be interesting and a little hard-hitting too. You can make substantial returns. For example, one trade made me about 40 years of income. You know, it's possible. Things can happen. But if you are a top 10 percenter, this involves taking on risk and taking on a lot of time to learn. But you've got to be, if you are going to go down this path, you have to be at least a top 10 percenter. So if you take 10 investors, you got to be in the top one of those 10. If you're number 2 or number 3, you're probably not going to make it. Very important. Very important. Make sure everybody gets that as well. Investing is a blood sport. Take it seriously. I don't want to mention the Olympics, but look at those people that train for the Olympics. They dedicate their entire lives to being the best in the world. And even if you are in, say, I don't know, 100 countries in one sport and you come in 80th out of 100 countries, you are still world class to even make it to that stage. So remember that. But you've got to be the best of the best when you are in this game. Next, regarding time commitment, it does require initial learning and ongoing learning. Always keep your tools sharp like a good tradesman. But it can become more passive over time. So once you get really good, there's only so much you can learn. So you can invest less time in learning. Also risk. Financial risk varies with how you invest, what you invest in. There is very high potential for high returns. And also you can get wrecked. High losses as well. Skill development. This is probably the most important thing I'll say today. Focusing on learning how to invest, enhancing your financial literacy and understanding markets is utterly invaluable long term. What you learn here, if like for people in this channel watching me at 20 years of age, and you pick up a couple of nuggets from me, you take them with you over the next 45 years of investing, they will be life-changing. Okay, so take the time to learn. And like getting into a disruptive asset early and hard, same thing here. Learn early as you can in life. Okay, it doesn't help as much learning these tricks if you're 80 years of age. Not that you can still learn, but the impact of learning early in life is huge. So the skill sharpening here is massive on investing as a side hustle. Even if you are average, you will still learn stuff that will make you far more successful than the general market participant over time, which will have infinite returns on your investment. And flexibility, investment strategies can be tailored to fit your own risk tolerance and financial goals. So my take is, forget the side hustle. Learn, dedicate yourself, learn, get a process, get a tool, find out what you like. Make sure you like it. If you don't like investing, forget about it. Stick with the side hustle. And then focus on being in that top 10% of investors. That's it. Go for it. Next question is from Zifush S. Hunting for alpha. Teladoc, could it be a good risk reward? I don't see a major catalyst in the near term to assign expected value probabilities. But as you said, better to position when no one is looking at all. Let's check this one out. First of all, this is on the ATR model, which originally was designed to identify zombies. We had a thing called zombie coefficient. And boy, this thing is dead. This is down 97% from the all-time high. This makes Polkadot look a little bit better, okay? Very bad. Very bad. Let's look at some numbers. Okay, blue is revenue. No growth. Loss-making. Bad. Red is debt. Over $1.6, $1.7 billion in debt. Very bad. This is the quickest stock analysis I've ever done. It's total garbage. Please, everybody, don't play with garbage. These things do not recover, okay? They do not recover. Maybe 1 in a million will, but it's very rare. Dead. Zombie. Okay? I think even Kathy Wood sold her entire bag recently. I'm not even sure, but anyway. Next question. A lot of questions today. And this one, I had to take it because I'm very concerned about it. This is from Jump in the Fire. Hello, I'm 45 years old. New dad 2 days ago. Congratulations. Whoa. I was thinking new dad 2 days ago with twins. Even more. Again, better late than never to start. And I've never had much in the way of retirement plan in my life. Today, I completed a transfer of my small work pension into a self-invested pension with Fidelity. Unfortunately, it will not let me invest directly in US stocks. I now have £29,000 British pounds to deploy. I will not be able to take anything from this account until 2049. James, how would you decide to deploy this, knowing my situation, not financial advice? By the way, I followed you since the first YouTube posts and have some idea of what you'd say, what I wanted to do, but it's the most money I've ever had to invest. I'm looking for a little push of encouragement. So, it sounds like pounds, you're in the United Kingdom. It's the only place I think that trades pounds. And let's jump into a couple of things that kind of are concerning. And because I don't know what you're limited to, I want you to try find maybe if there's another way out. Congratulations for taking the step and congratulations on the new baby. But these are things that I have to be very frank about and hang out in the community because a lot of British people that do know a lot about the SIPs and what you can invest in. But I'm very concerned about no investment options, no ability to buy US stocks. All the returns globally are in the US stock market. Okay, you might find the odd flyer here and there in different places, but not like it's Fidelity. Is that not have access to US stocks? You have to find a way to get access to these things. Second of all, this is very important. If you can take a penalty, take it. I would rather have 10 cents on the dollar than be locked up in shitty investment options. I've used that word twice today. Sorry about that, but I want this message to get across. There's a reason I never invested in things like 401ks and pensions because I knew I could make a lot more money on my own. You know, get bird in the hand is worth two in the bush type of thing. I never wanted to wait till 65. I wanted my money in my mid-20s so I could invest, build a bag, buy real estate, invest, build a bag, buy real estate. That was my whole thing in the 90s. Not anymore, by the way. So even if you gave me 10 cents on the dollar back then, I would have been able to make infinitely more than waiting. And waiting, wow, you said until 2045, you're 45. I did some rough math. You can't collect this until you're 70? Like, we don't know if there'll even be a planet when you're 70. And I'm a lot older than you are. So this is really concerning. I don't know if there's a way out of this trap, but if you can't invest in US stocks or crypto or disruption or the things you need to be in, try see if you can take a penalty and go to, another brokerage firm that has proper assets. The whole game is rigged in pension funds and schemes and locking people down. It's not a good thing, everybody. Get the cash into your hand, brush up on your skills, invest in disruption. Remember, all the money, all the return in history is made in the top 1% of assets. If you are in the other 99%, you're not going to make it. I feel like I just threw a big bucket of cold water over you. I don't know. I'll ask in the community, by the way, and I'll make a post later. We have a lot of people who are SIP experts. See if there's a way of taking a penalty, even if it's 20%, 50%. I don't care. Take that money and control your own destiny. Being locked till you're 70 when you can't even choose the assets. No, that's not good. So I didn't give you an answer. I will try to find an answer though, if I can. Next question. This one is short and sweet. Is there a reason not to sell and buy back crypto assets immediately to harvest the loss? Would that change your allocation or holdings for more than a moment or so, given that there is no wash sale against it? The answer is, oh, hell yes. And yes, I do it all the time. In fact, at the end of every year, I do what I call cleaning house or sweeping out the barn or whatever. I look at every asset and I say to myself, would I buy it at this price? If the answer is no, I sell it. Okay. And the second thing I do is if I can harvest losses, I do that too. And so definitely do it. But do check on these things. First of all, I do it rather often. Make sure you don't get caught out, which means, imagine, heaven forbid, an asset falls down real low, you take the hit, and you try to jump back in, but the price rebounds really fast. That can happen. Make sure that doesn't happen. That's what I mean by getting caught out. And also make sure the tax law does not change. Make sure wash sale is still allowed in crypto, because the IRS have been talking about removing that loophole. They haven't done it yet, but they're talking about it. And also, favorite time of the week, helping animals. Thank you all. This week we donated to Sea Shepherd to help support the research and conservation of beaked whales, which have a high chance of being spotted on the Guadalupe Island off the coast of Mexico. So shout out to the team at Sea Shepherd as well. Tomorrow morning, DCA Live, 7:40 a.m. Well, between 7:30 and 7:40. And it'll be myself, CTO, Rect Mando, and Marty Party. The best alpha team on the planet. As people have said. Not my words, other people's words. Don't shoot the messenger. Thank you all for coming. Let's do some live questions with you all. And thank you, everybody, for coming. And thank you to the mods in the chat, too. And wow, there's 10,000 people watching live. That's never happened before. That's a new record. So people want alpha, and Bitcoin price, I think, sucks. Oh, wow. It has taken a big dump. Bitcoin down $2,300. But that's okay. It's volatile and it's manipulated. The minute you know crypto is manipulated, it helps you deal with certain things. Oh, this could be a good opportunity as well for a little something that I like to try and do. Oh, yeah. Oh, yeah. Yes. Okay. Long-term holder for a cup of mushroom tea. Cheers, friend. Thank you so much, buddy. And thank you for all you do. I owe you big time for everything you do in the community. Bert Frank. Thank you, James and Mods, for all you do. Oh, come on. Ask me questions. No need to say thank you. Thanks to you, Bert Frank, as well. Jimmy God. Just chilling with the family in Turkey. Thank you. Thank you, Solana and the IA family. It's been a good couple of years. Yes, it has. But remember as well, good years are followed by bad years. Be prepared. Be very prepared. Okay? It's not what you make, it's what you keep. Dude Face, I really enjoy Tasty Trade. Would you consider reviewing their platform? They had no outages last Monday, and their brokerage was built by the founders of TOS. Yeah, Tasty Trade is great for options trading. I think I used it briefly in the past, many years ago, but it's just there's certain things that I need that they don't have, but that's special stuff. I will check them out for sure. Thank you so much. But I do know they are definitely good. And a lot of very good brokerages out there too. What's the other one? IKBR, BRKI, or whatever. It's also very good in the UK. Roy McDonald, what do you think of putting all of my Bitcoin into Solana? Grabbing the bull by the balls. Yeah, I think about that every single day. But remember, you got to always balance risk and reward. Okay, so we talked about diversification today. Let's jump back into that for a second. This is so important. If you take these assets here, all right, Bitcoin, Tesla, I think, are the least risky of all these assets. MicroStrategy is risky. Solana is risky. Solana is riskier than Bitcoin, but it'll get more reward. But you need to have that safe bag. Now, NVIDIA was not that risky, but then it got very risky when it got to around $1,300. Then it was overvalued, I believe. And that's why we hedged at that level. So everything has a price. I think There's a couple of unique facets of Bitcoin that make it super, super fascinating, like hardness, like new asset class, like money coming in. I think it's going to have a very bright future, as will MicroStrategy. But Bitcoin and Tesla are the two least riskiest things here. So balance things carefully. And that's so important. That's a big part of the allocation, is how much you allocate to each. Some of my allocations have grown out of control because the assets have done so well, but I have not changed yet. I have not sold, other than tax selling, one single Solana, one single share of MicroStrategy. I swapped between Tesla and MicroStrategy. I pair traded in a retirement account, trying to build it up to a big bag. Doing an experiment, of course. But yeah, allocations matter, Roy. So I hope that helps. And thank you as well for your super sticker. KT, Andy, Crypto Last, Outpoint, Space Signals, Pancake Panda, Viciously, Dog One. And there's probably a couple of others there that we may have missed. That is unbelievable. We've never had over 10,000 people watching. Hope you enjoyed the show. Thank you as well to the mods in the chat. I'll see you all tomorrow. Swiper, no swiping, and DCA Live first thing in the morning. It'll be a fun agenda. And we'll see what the market does right now. Looks like it's poaching some shorts down at 58.7. But that's why you keep your seatbelt on in the crypto market. Thank you all for coming, everybody. Have a good night.